So when I made my thread this weekend, I made a nice prediction. Okay, it was not hindsight. My guess was we were gonna reject from this fair value gap right here, and we were gonna go rebalance this at least. Okay, and you can see we did rebalance it, and there's huge trades in here. Someone in my Discord did short this for about 18 ticks. So yeah, and ideally, this is actually a good lesson for people to understand. So a lot of these guys on Twitter, they post all these hindsight charts, and they're like, "Oh, I knew we were gonna go down here, right?" And even though I'm gonna say, okay, I want to knife through this. Obviously, I want to knife through this and at least hit this, right? Even though I want that, it's like I don't know for sure this is gonna happen, if that makes sense. And what a lot of people don't realize is a lot of people think, okay, I'm expecting us to knife through this. There's no possibility of us bouncing here, okay? And a lot of people don't understand that if you really want us to knife through this, right? Doesn't this still look like a textbook long setup? Like, let's say you were let's say you did have a different bias here. Okay, this is still a textbook long setup. Like, that's what people don't understand. Like, just because my bias is bearish here and I want to cut through this doesn't mean, like, okay, if I see a textbook long setup here, doesn't mean I'm not gonna take it. Like, some people think like, oh, I have to be right. We're gonna hit this low. But even though I think we might go hit this low. Okay, if there's a textbook setup in here, like, there's no way I'm not taking it. You know what I'm saying? So that's going to kind of the thing where you don't have a bias. And even though I want to have a bearish bias here, what a lot of people don't realize is you can have a bearish bias, but again, when you're in a trade or when you're looking at biases, you have to think from the other perspective. If you can't think of a bullish and bearish bias, okay, you have to see the other perspective just in case you're wrong, okay? And the second I know I'm wrong is if we get a really, really nice confirmation, like 5-minute setup in this fair value gap somewhere, okay? If we get that, I'll know I'm wrong, okay? And in this situation here, okay, you can see we got 5-minute equal lows. So actually would expect us in this situation to go down a little further, okay, to these equal lows and then hit this fair value gap. I think NQ is kind of, it's not bearish. It's we're in a giant fair value gap in NQ, I think, right now. But again, right now, okay, you can see this equal lows on the 5-minute leading down to this fair value gap. So I think we're gonna hit this, and then from here I'll kind of reassess. And what I do is in live time I kind of look at the type of candles we're getting in here. Okay, usually if my bias is correct, we'll see like a giant cutting red candle through here with another short setup. Okay, but what do you like? What's a candle that's gonna tell me I'm wrong? Okay, a candle that's gonna tell me I'm wrong is if we quickly hit this, we wick above, and we get some giant fair value gap maybe, and I see us bounce out that fair value gap, right? So something like this. Okay, if I see us, even in hindsight, like this, I don't have to take this fair value gap. If I see something like this form, right, and I have a bearish bias here, well, a nice giant green confirmation candle with a fair value gap and discount, right? The second I see a nice green candle bounce out of that confirmation fair value gap, okay, I probably know I'm wrong. Okay, and this is something that I hate being wrong, and this is something that took me a while to kind of to master. Okay, and what I'm talking about is you have to master being wrong sometimes. Okay, some people can't accept it, and I grew up playing sports, so like it's still hard for me to be wrong, and I do have a 100% win rate in my last like 15 trades right now, which is nice, but I'm gonna have to be wrong at some point, and over time you're just gonna have to accept it. So the second I know I'm gonna be wrong in this is if I see a giant green candle here with a fair value gap and discount, and I see us bounce off that. Okay, if I see something like that, okay, I'm probably gonna have to accept, okay, I'm probably wrong. And why do I have to accept I'm probably wrong in this situation? Okay, again, it goes back to kind of the thread that I posted on Twitter over the weekend, okay? If you see a nice momentum candle off a fair value gap and discount, okay, I would say 90% of the time, the next high should be the draw. So obviously this is like the next high, but again, if you see nice momentum off like a fair value gap here, like if we got this scenario, okay, this is obviously going to be the next high, but again, I try to tell people, okay, you have to visualize this as a higher time frame. okay, if you really want to get to the next level of trading, okay, you either got to have multiple monitors on a screen, or you got to have second 1 minute chart pulled up and a second 15-minute chart. But if you can master seeing the 5 minute time frame as like a 15-minute, okay, if you can kind of memorize the times, like the 15-minute candle closes, the hourly candle closes, and you can imagine the highs and lows of the hourly 15-minute candles, okay, you know that this is going to be a significant hourly high. So obviously, well, this is the target on the 5 minute, right? If you're on the 1 hour, I don't even have to look at the 1 hour right now. I know this is going to be significant high, okay? See, I know this is already significant high, so obviously this would be the target, okay? And chances are, if we do have that nice momentum candle out of this fair value gap right here, as I was talking about, okay, chances are we will go back up and hit this high. And because this high already kind of rebalanced this whole fair value gap, it likely means we will probably go higher, okay? And depending on the momentum of the candle, okay, after this, that may mean we go back up here, okay? So that's kind of what I'm looking for to be wrong. And again, you should always have kind of invalidation setups in mind just in case your bias is wrong. So even though I want us to cut through this, okay, I'm totally accepting if we get a long setup, it's not like I'm not going to take it. Like, I would totally take a long setup here, because if I was bullish, well, I could argue 50 reasons for this to be a very, very nice setup, you know? So that is something I kind of want to talk about, because when you scroll through Twitter and you're seeing all these guys with these, like, perfect executions, okay, let's say I shorted this right here, okay? So let's pretend this is a short execution right here, okay? So I short this candle, okay? And let's say I cover one here. Or no, let's say don't cover it all in this fair value gap. Let's say just wait till this low. And let's say we have a nice candle down to this low, and I cover it here. And then I post it to Twitter, okay? A lot of people think, okay, how did you know we were going to the low? Well, usually they don't, but they do have a hunch. But a lot of these guys doing these hindsight executions, right? When we are in this side, this fair value gap right now, okay, the fair value gap we're in right now, okay, a lot of times they're expecting this to get broken through, but usually the executions where this doesn't get broken through and we bounce, okay, they don't post those executions, and a lot of people don't understand that. And I typically try to, and it doesn't really matter for me because I'm a type of trader that I'll take partials in this anyways. So you'll kind of see, okay, I'm taking partials in here, and let's say this is a short-term bottom, it'll look really good on my part because I'm taking partials here. So someone will be like, oh, you bottom, take partials. But then I just get to stop at the other break even. Okay, but is it a loss? No, it's a win. And even though we might not hit the low here, okay, it's still me kind of reacting live time to, okay, if my bias is wrong here, okay, this is just a good spot to cover. And a lot of these guys on Twitter posting these executions, they don't post the executions that don't hit the home run target. I would consider this and possibly this a home run target at this point, because in live time, even me knowing ICT as long as I do, I'm totally not sure if we're going to bounce off this fair value gap right now, okay? And that's why a lot of people say you have to react to price in live time. You don't predict price. So I'm not even making a prediction here, okay? My first prediction was we would hit this fair value gap right here off of this bearish fair value gap, okay? And so far, that's my only prediction. I do not really have a prediction of us going down here, although I am a little more bearish here. Okay, but because this was unbalanced and all this was balanced up here, okay, if we look at replay mode, I kind of talk in my thread. I say you want to look at the probabilities of a balance and unbalanced fair value gaps, right? So now that we've looked into here, okay, this fair value gap has been repriced or rebalanced, same thing. Okay, there's no fair value gap up there, is there? Okay, all these have been balanced, right? This has been balanced. Okay. Now that all this is balanced, we're left with an unbalanced fair value gap below. So even if we don't hit this, okay, the long-term probability of us stopping at a balanced fair value gap with no more balanced fair value gaps above, the long-term probability of us going to rebalance a fair value gap lower is obviously not going to be 100%, but long-term, you're going to have a greater chance of kind of, okay, we should go balance this fair value gap, right? And even if we don't, okay, if we got another green candle like this and we just didn't get this red candle today, again, for the guys here waiting for these confirmation setups on the lower time frame, right? They're probably going to event a short setup anyways, okay? If we got a giant green candle off open instead of this giant red candle, okay, I honestly do not believe there would have ever been a short setup. So it's just, again, playing the confirmation setups as I kind of talked about last week a little bit. And if you missed what a confirmation setup is, let me just kind of explain that real quick. So just a quick short lesson on the confirmation setups real quick. Okay, if we go back to let me see it here. If we go back to the Friday, okay, I said in the free trading chat, okay, I said I was getting off the charts, but I said, okay, the draw is still probably 3-6, which was right here. And we actually never hit it till NFP. We got pretty close, and this goes back to one of my other lessons. Okay, if you ever see us get really close to an obvious point of buy-side liquidity, which is right here, okay, if you ever see us get really close, and then we kind of go down a little bit, and there's still like an unbalanced fair value gap, we still never tap buy side. If you ever see this, right, we will always usually go back up and hit it at some point later. Okay, and again, I'm a firm believer that the news, the data, okay, the data does what the chart is ready for. And in my opinion, right, NFP, we had a nice breaker block below us, right? And this is kind of big zone, but we had a nice breaker block below with untapped buy side above, so it really would have made sense for NFP to dump all the way below, right? So again, I'm a big believer in chart knows before the news, and you guys know that. It's not something I'd recommend playing, right? So you shouldn't be playing news anyways, but a lot of times, okay, the news usually does what you're expecting the chart to do if you know ICT, okay? If you're basing news off of retail concepts like Bollinger Bands, okay, those don't follow as well, okay? It's got to be some algorithm-based strategy, so whether it be harmonics and fibs, I know very, very good fib trader who does the same thing, or ICT, okay, both strategies trade based off of algorithms, okay? You're going to start to understand that news, when it comes in, the chart knows before the news, okay? And it's still not a great idea to play NFP. It's not a great idea to play CPI, but in the future, down the road, okay, if you ever have extra money or profits for the day, okay, or you want to demo trade, okay, I know a trader, he trades fibs and harmonics. He some of his best days are him playing him literally playing CPI. Like she shorts the wick where he expects the wick to go, or he buys the wick down. And obviously, you're not going to do it the full position or anything, but down the road, 10 years, that is something to take into account. And I know some of his biggest days are them. And this guy trades all real money. I've seen his stuff, so it's pretty amazing to watch. But I don't trade the news yet, but maybe down the road, maybe with light profits, I'll try. I'm sure ICT. I've seen ICT. He used to trade the news and demo a little bit. I'm sure he's taking news plays, but again, when news comes, you should expect a lot of volatility. If you really have a good idea what the chart's going to do, I think it's not worth trying like a small position. But as we're learning now, I don't think it's worth it. I think it's kind of something you should learn with more experience. So, again, I just want to make a point that I'm a big believer that data usually does what the news kind of suggests. Or the news does what the chart suggests is going to happen. Okay, so this is something that I've talked about in a YouTube video before, but again, whenever you see a wick go really close to buy side and then we kind of dump back down, we usually end up going back to hit it. And in this situation, what you kind of see is, okay, we had a fair value gap here, and we had a very, very nice momentum candle here cutting through this bearish fair value gap. And this is really the key thing that tells me, okay, I see this wick kind of hits it, almost hits it, but it doesn't. And right now, if any of you read my thread on Twitter, okay, what do I talk about the momentum candles? When you see a momentum candle like this, like a strong, high probability institutional candle, cutting through a bearish fair value gap, or even just bouncing in general after taking sell side, these lows, okay, you should expect the next draw on liquidity to be all the high. So this high this high, and again, if you visualize this on the 4-hour time frame, the most obvious high is going to be where? Probably this high up here, right? So this is the ultimate target, but obviously this is good partial spots anyways. But again, in this situation, you kind of see, okay, there's a wick. We almost go and hit it, but we don't. Okay, but the reason why in this situation, why, okay, out of 100% confidence we should go back and hit this, is basically because of these momentum candles here. If these were consolidation candles where we kind of like made our way up slowly, no fair value gaps right here, we never broke through any bearish fair value gaps, then if we didn't hit buy side up here and we started dumping, maybe I'd be less confident. But when you see momentum like this, and when you see momentum kind of stop right before we hit an obvious high, most of the time we will go back up and then end up hitting the high. Okay, and this is, what does this mean? Well, this means later when you get the retracement, that means you can look for another long setup, right? So a lot of people say, like, and ICT says the same thing. Once we get this to close to a high, right? Do you guys, if we ever get this close to a high and you see a 1 minute fair value gap, like let's pretend this is the 1 minute time frame, we retrace to a 1 minute fair value gap right here or whatever. Okay, is this a setup that you guys want to take when we're this close to the high already? Type 1 or type yes or no in trading chat. Okay, the question is, if we're ever this close to a high, is this really truly a setup that you're going to want to take? Okay, exactly. And I know that's kind of a simple question, but there will be people who see, okay, we almost hit the high, we're probably going to hit it off the next leg, and what they'll try to do is they'll try to long the next fair value gap. And like in this situation, okay, here's buy side liquidity. And even though this does work sometimes, and I do it sometimes, okay, you really don't. Okay, you can see we kind of bounce out this volume balance, but then the second we cut through it, okay, you can just see the setup goes in shambles, right? So even though like sometimes once in a while, if we're very close hitting buy side, right? Like I did actually take this setup on Friday or on Thursday, I mean. Okay, see how we are close to buy side. Okay, the thing that really helped me kind of have confidence in the setup is, okay, we never hit buy side and we have double equal highs and we have a nice momentum candle. So being that we're this high, ideally this is not going to be an A++ setup just because, again, ICT talks about you want to wait till the price is in discount, okay? So the ideal entry would have been down here, right? So now we're not at discount anymore. This is kind of a chasing entry, but this is more of a technical chase because, okay, we do get strong momentum here, right? And we do have double equal highs, and we are very high, but this still looks like a textbook long setup because, and we are close to buy side. Okay, after we make this, do you see any textbook long setup here? No. Okay, this is the only one I see. The reason why is because lots of displacement, fair value up in discount. Okay, and double equal highs and buy side above. So although we don't see a textbook discount or textbook setup here, right? There's still kind of some risk in taking this. There's going to be more risk in taking this setup versus this setup. There's going to be much less risk taking this setup because this setup isn't discount. But like again, I've missed moves before in the past. Like I've missed moves down here, and then I'll see something like this, and I'll be like, okay, I missed this. Maybe I'll go half size in this. And the reason why I say you go half size is because you're so close to buy side liquidity. Ideally, it's not a smart entry, but I do see it work. And I'm not going to say I do see it work time to time because I do see this work a decent amount of time. It's just it's not smart to take, as ICT says. And I always talk about people, okay, if you accept the risk, you're fine to take it, but I know there's a lot more people out there who will not accept the risk of taking a setup this close to buy side. But truly, if you know where the draw is, I think it's worth it, in my opinion. If you're on a funded, I always tell people when you're trading a funded account, right? If any of you guys are trying to get into funded accounts, okay? If you're taking a long setup right here, let's say a long right here, okay? And this was the most textbook long setup on Thursday. If you're long right here in a funded, and you have, this only applies to people doing trailing drawdown fundeds, right? If you take a long in the funded right here, okay, it is really best not to hold till here because of the trailing drawdown and just sell right here. And the reason why I say that is because these people on these funded accounts, what if this target never hits, okay? If you leave a few contracts for up here and then we come back all the way down and stop you guys out, okay, you're going to get your trailing stop might hit, right? And this is why the trailing stop loss accounts are very annoying. The only way I would suggest holding runners for like a high like this is if you're in a personal account. But again, if you are in a funded and you do have a trailing stop, I think it's worth it to sell your full position at the low-hanging fruit. And what I do on my funded for the trailing drawdowns, right? I literally sell my full position here, and if I still think the draw's up here, I'll usually re-enter somewhere up top. And there has been a person DMing me recently, and they always sell. Okay, they always long and then they sell to low-hanging fruit, and they always DM me at the end of the day saying, "Oh, I wish I didn't sell. I could have been up $500,000." And I always tell them, "Who cares? Okay, what if we never hit this high? Your trailing stop would have been much higher than it is right now." Okay, and if you're making $500 to $2,000 a day in a funded, that's still good. You have to be content with that. And because it's a funded, it's so risky. And again, if you really know where the drawn liquidity is, you can always re-enter. Okay. I obviously wouldn't re-enter anything in here because there's no good stop loss. So I am posting a visual on stop losses tomorrow. But right here, there's no good stop loss. Okay, if you know what a good stop loss is, you should look for like a swing low or an order block. Okay, do you see any high probability order blocks in here to stop out at? No, I do not. This will not be a good long. Okay, but then right here, why would this be a better long than longing anywhere down here? Because right here, you have some consolidation, so ideally you should not see us go into the consolidation. So here provides more of a textbook stop, where versus right here, there's not really any concrete stop losses. And if you're in a personal account, feel free to chase this. I don't care, but if this is only for people who buy the funded with drawdowns. And yeah, Silver Surfer said, what about a single runner? Same thing. If you're in a trailing stop, if you have a trailing stop and let's say you took 5 MES cons, 10 MES cons, or even like 3 ES cons, right? And you sell all but one runner here, okay? If you sold all right here, okay, and we went up another 10 points, right? On MES, I feel like on one MES, again, 10 points would be, what, $50, right, for one contract. I feel like that wouldn't really totally mess with your trailing drawdown if it came back down, right? But if it's an ES con, again, that's going to be $500. And what if that $500 off that runner goes back minus 500? Okay, now your trailing drawdown is going to be plus 500. So if it's MES, it is a little different. MES, you could probably hold maybe a single runner if you want, but a single runner for 10 points, $50. I don't really think that's a lot, especially if you're on one of the 50Ks or 100Ks. But I think more people are going to trade ES on those. Maybe if you're taking like 10 ES cons and you want to hold 2 or 3. But again, if you're taking 10 MES cons, you sell 7 here and you hold 3, that's about $150. Okay, the second we go back down, hit your stop at break even, that's minus $150, and your trailing stop just moved up $150. And if you do that more than one play, okay, it's going to start to add up. That's why I say sell the low-hanging fruit. But options, any personal accounts, again, it's always good to hold runners, especially when it's a free trade after. If you're holding runners with a stop or break even, again, nothing can go wrong unless there's World War III and we get a giant knife candle and nothing you can do about it. But other than that, I think it's on a personal account, it's a lot better to hold runners. So the people wondering, okay, you see the charts in hindsight and you say, okay, Thursday, I know some of you probably longed here. And you look at the chart in hindsight and you see, oh, we end up hitting this high. Okay, this is still a good move, and a lot of people don't realize that. This was fine to hold till, but for the people wondering, okay, would you have held to this high? On a funded account, no. On a personal account, yeah, maybe you could have held one runner with a stop at break even. If you are on a personal account, I'm sure some of you did that, but it just goes back to, like, if you're in a personal account, it's more of a psychology thing. You have to be willing to kind of walk away from the screen and letting your runner do whatever without looking at the price of it. That's something that helps me a lot. Assuming you went long out the 50% tracement is OTE. Where'd your stop be? Yeah, below the previous low. And I actually made a visual of stop loss placements I'm posting tomorrow. So like if you long this fair value gap, right, your stop loss is not under the fair value gap, your stop loss is below the swing low. And I actually talked about this in a video I made that I haven't uploaded yet, but if we look at the 15-minute right here, this is kind of interesting. So this is a whole fair value gap. Okay, the swing low in the 15-minute is right here. Okay, but the swing low on the 5-minute is right here. And even though it's like a 1 point difference, okay, this is kind of a safe versus an aggressive stop loss. So an aggressive, maybe smart stop loss, if you want to lower your risk, would be this last swing low, because it is a swing low in the 5-minute. But like the safest possible stop loss would obviously be the highest time frame obvious low you can see. So like right here. That's kind of another thing that I got to talk about. And again, if you guys are joining and you don't know or understand ICT, I would go watch his videos. I know some of you guys in here probably have no idea what ICT is. I think it's you should be watching his videos, or else all this is going to go over your head. These are not classes on basic ICT fair value gaps and stuff. I'm expecting most of you guys to already know what a fair value gap is and all that. Cilantro, please. I do eventually think big money will realize too many people are using ICT and change the game. Okay, ICT is all about ICT is not really the market. That's just the concept. Okay, ICT works because it emphasizes liquidity and how big money and smart money is supposed to enter. And if there's not big money in this market, there's no way for them to enter. So all the concepts and how this market runs has to be based off ICT, or there'd be no market. Okay, hopefully that makes sense. And even I've always wondered the same thing, like, if I could go back in time before ICT started teaching and we could rerun some of these days, I'm always curious to see if the day would play out exactly the same if ICT never existed. I wish I could do that. That would be cool to see. No, Eric. This is being recorded. Eric, the only other thing I talked about was kind of how, you already know this. You've already watched it in my other video. Was kind of how he got really close to the buy side liquidity on Thursday, but we never hit it. And then usually what happens is we end up coming back and hit it. That's the only thing I've kind of gone over. And guys, feel free to ask me questions in the live chat. The other thing I wanted to go over was, I think it was in my thread. Let me check my thread real quick. Oh yeah, it was this. So someone replied. So I said two things. This would be unbalanced. Okay, if we go back in replay mode, unbalanced versus balanced fair value gap. So unbalanced would be something like this, right, where we don't balance, where this is not balanced. And if you know how the market works, the market will always go rebalance old fair value gaps, old volume imbalances. Okay, it doesn't have to do it right away. Okay, so remember, we could go like this without rebalancing this and then come back down. Okay, so that's why it's key to look at a lower time frame. But the one thing I posted was, because we already rebalanced this and we have an unbalanced one here and there, the probability that we're going to go down because we have two unbalanced versus one balance is higher than us still going back up, because this is already balanced. And the thing that, if you guys know Romeo, he actually commented saying this is balanced. And I did this very quickly, so all I did was draw the fair value gap, and I did not realize this, but this, okay, if we look at the low of this candle right here, let me just draw a back line. Okay, low of this candle, or the open of this candle is, where is it? 4,121.25. So that's the open of this candle. The low of this candle is 4,127. So the low of this candle is actually a tick below this candle right here, which technically means this fair value gap is rebalanced, because any wick into this balances this fair value gap, right? And this is considered a IOFED entry. Okay, so like it's called institutional order flow entry drill. And I've talked about this before in my lessons, but you can't really predict when an IOFED entry is going to happen. The only way you can predict it is if you make your risk reward like this. If you make your risk reward right when we enter the fair value gap, and then you do it. And this is the only way you're ever going to be able to catch these. I don't really do this. I like to have mine a little lower in the fair value gap to tighten the risk. This is just one of those scenarios where, okay, you probably just want to be filled, and that's okay. Again, a lot of guys on Twitter, in hindsight, they're like, oh, I predicted this IO for entry. Okay, likely they didn't. Likely all their risk reward box was drawn like this, and they just bottom take the entry, and then it just went up. Okay, and that's more of a hindsight thing. I've tried to understand where or when ICT can predict IO entries. He really hasn't been clear about if you can or not. I don't think you can. I could be wrong. But if you want to catch an IO entry, you have to put your limit right when the fair value gap starts, but you just have to accept more risk. And because this is an IO entry, because we did go tick below, this technically is considered balanced. But again, the odds are still, this is unbalanced, everything's up here is balanced. So the odds, what are the odds? Or what's the best probability? Best probability is for us to go down and rebalance the fair value gap that was not balanced before. And I haven't really talked about a lot of how rebalancing and unbalanced fair value gaps work in my videos. But it is something I like to look at, because if there's like 50 million unbalanced fair value gaps below us, well, where am I going to expect the price to go? Probably under us. So like right here, okay, the reason why I'm bearish going into this week and I'm expecting this, which this could be totally wrong, and again, I'll know I'm wrong, is if we get a nice green candle that brings us up to about maybe here, I'll be okay. We're probably going to hit this high. We probably won't rebalance these. Okay, but I'll see the invalidation candle in live time tomorrow, and I'll know right away. And as soon as I see it, I'll switch my bias, obviously. But again, I'm just playing probabilities because this is unbalanced, and because this is unbalanced. Again, I'm gonna play the probability that I'm expecting price to go bearish this week, and this is really the final target to have. I think we can get a nice long setup off of this. But you don't have to be right. You can still play the probabilities and be 70-80% correct. And the probability that we rebalance these is probably a better probability than going up, because all this stuff, there's no fair value gaps here. There's no unbalanced fair value gaps here. I would say the drawn liquidity is this high right now. Okay, so that's kind of my bias, my overall bias. But I would prefer something like this. Okay, and the reason why this would be better is because then we'd be rebalancing these and then bouncing up to hit buy side. And I'm not a swing trader, so I don't actually enter these positions. I'm a day trader, so I kind of use this bias in hand with my day trading. This is ESM 2022. Will this be valid? Jaxby said that. Yes, Jaxby. So the setup Jaxby posted in a live chat, I was trying to get an entry for that short, and it just never gave me one. But yeah, that's totally valid. That inverse fair value gap, that was sneaky, and I missed it, so I didn't try to re-enter. But yes, I was actually trying to enter that. Use limit orders to enter, look for reactions, and enter via market orders. It depends on accounts. If I'm on a personal account, I think limit order is always going to be the best. Okay, limit order is always going to be best because no matter what, you have a fixed risk to reward. So if I wanted to get along down here, okay, I'm never going to change where I'm going to enter, because again, if I get FOMO and I see, oh, we kind of bounced off here, right? If I see us come down like, let me see. If I see us come down like, so I think we're cutting up here, right? If I see us do something like this, where we almost hit man tree, but we don't, and then go back up, do I really want to market chase this? I could, but what if this happens? And then I get chopped out, or I get scared about, okay? I always think limit orders for a personal account is better. If you're in a funded or you're in a time limit or anything, if you see us bounce from a fair value gap like this, and you see a strong momentum candle, but let's say your limit order didn't get filled, if you're in like a funded account or money risk you're willing to lose, sometimes I will chase if I see a nice giant momentum candle near a high. Okay, there was an example of a play I took on Friday that I did exactly this, or on Thursday, I mean. It was on NQM, I think. So on NQ, it was this candle down here. I have it marked already. It was down here. So I said that I was bullish here because we swept the lows 3 times already, and that's the 3 drives for you guys that don't know that. So we swept, or 1, okay, 2, this low. So we get the first low, second low, third low, and then 3 drives pattern. We should shoot back up. Okay, so after we swept the third swing low to sweep this, right? Literally, like, we started, I saw like a nice hammer candle, and then I started seeing, okay, this candle starts looking like it's gonna have momentum. I literally said on live, okay, I'm just market buying here, my target's up there, and I got like 10 points off that, and that was a pretty quick trade. I didn't point out a stop loss, but the stop losses should be common sense to be under this low. But if I ever start seeing nice momentum or something after sweeping a low, and I see an obvious high, and you can see this is unbalanced still, and we have an unbalanced fair value up above with a high above, and you start seeing momentum, I will time to time slap if there's still kind of room to get up there. Okay, let's say from here to here, where I'm trying to slap the entry after I see the nice momentum candle. Let's say this is ES. Pretend this is ES, and let's say this is 1 or 2 handles. Am I going to chase this? No. But if this is 5, 10 handles in ES, of course I am. This was about 10 handles on NQ, which is still pretty good. So I was like, okay, there's still 10 handles left till we hit this high anyway. So I felt the reward was decent enough to go for that. And unfortunately, I did sell a little early. I like to my kind of typical trading, if I'm scalping, is I'm longing here, and I'm just getting out here with, okay, I'm getting out here. Even if I think we're hitting this high, great. I'm still getting out here because this is the obvious target. If I see something that changed my mind, like, okay, we're blasting above this fair value gap now, and we retrace, and that's when I'm like, okay, we blasted above this fair value gap. These shorts probably got stopped out and want to reverse their position. That's when I'm kind of thinking, okay, here's where I could re-enter it after getting out here. I don't really typically, especially in a fund, I don't really typically hold all the way up to this high, just in case of the reason I told you before with the trailing drawdown thing. But I like to re-enter at to see more confirmation. And more confirmation to me would be like, okay, giant momentum candle going through a bearish fair value gap. Okay, again, I explained in my thread what happens when you see a giant momentum candle going through a bearish fair value gap. That usually means the draw is still higher. And then that's when I just kind of go to a higher time frame and I look for more obvious highs after the fact. So like this was an obvious high, and then this one right here. And on Thursday, this high in my live voice, I was like, okay, I really think this is going to hit. We got like almost a textbook entry here, but I didn't enter it because I'm like, okay, this price action is kind of messy. I'll show you guys right now. Here's the high. It was right here. It was this inverse fair value gap. Oh, and it was right here. Okay, what do you notice? We never hit this high. We came very close, like I showed you guys earlier. When we get really close to a high with giant momentum candles below, you should expect us to hit this high. And this was kind of the last momentum, nice fair value gap candle we had. And I saw us bounce off it. I'm like, okay, we really should go hit this high in this leg. But because NFP was tomorrow, you can see we never actually did. We ended up making even a lower low, which I really, truly believe if NFP was in the day after this, I really, truly believe we would have just gone up and hit this high right here, okay? Obviously, I'm never going to know because this is hindsight, and I'm never going to know, but you can kind of see momentum candle up this inverse fair value gap, and it was a fair value gap right here, okay? We hit the internal high, so technically we did hit the high where the fair value gap was created, but I really think on a good day we would have hit this high, but again, I'll never know if we would have or not, just something you can't say. And then this right here, we took the low, we swept the low, we held this order block, and then we made another fair value gap. And same thing here, I really believe on a good day this probably would have worked for a long setup. And I was so close to taking this and I didn't. And this did work as a long setup, as you guys can see, okay? If you remember, where's the stop loss every single time you take a fair value gap? Where's the stop loss? It's under the swing low. Okay, but look how much this went under the fair value gap. This is obviously not a smart play because, first of all, this whole fair value gap is under discount. And second, like, if you did long this fair value gap, your stop would be pretty big. And some people, they might see this red candle big. Okay, this might be an invalidation candle to me. For others, it might not be an invalidation candle. And they might get out before we actually hit the low. So this was just very messy in my opinion and not worth trading. And this is kind of when I got off live voice. And of course, after we just pumped all day. There's not really any valid entries until right here, though. So not really mad for getting off, but this was the 1150 to 1210 macro. Okay. Right here, started to the 1210. And we actually ran, you can see the big move we get during this macro time. And we actually ran liquidity on ES during this macro time as well, I think. So 1150 to 1210 macro time is very underrated, by the way. I don't really see, yeah, we did. So right here, ES had a buy model, right? And we never actually hit the high until the macro started. So if you're ever looking to get out of position before lunch and you see like, okay, we're almost at this high, but you don't know if we're going to hit it, chances we hit it during 1150 to 1210 are highly likely, especially if prices kind of is going with momentum up to that. So okay, you can see right here to right here the macro ends. And you can see we ran that point of liquidity right during the macro time, which was nice. And you can also notice what happens when we run the macro. Just more textbook stuff. We get 2 equal highs or 3 equal highs. Okay, chances of us going back down without taking these equal highs are slim. But then what do you see? You see 2 equal lows. And if you go in replay mode, again, what I tell people, if you ever see equal lows or equal highs, or you see it both at the same time, okay, don't guess which one's going to be hit first. Wait until one of them hits first. Okay, I'm not trying to gamble. I'm not trying to long and say, oh, I think these equal highs are going to hit. Okay, I'd rather wait till one of these is swept and then go the opposite way. So if I saw something like this, then maybe I'll try a short. Okay, maybe I'll try to turtle soup a short back down to these lows. And in this situation, you can see that there's still more of a fair value gap under these lows. And this is really a good time where you can turtle soup positions. If you ever see a low, like at the beginning of a fair value gap, and you see us go back under that low inside the fair value gap, this is a good time to soup position. So you can see what happens when you take out these equal lows. Okay, right inside this fair value gap, this is your turtle soup entry. And this right here, inverse fair value gap combined with the bullish fair value gap, this would be your confirmation entry to get in long. Okay, so confirmation entry again. Even if you don't catch this turtle soup entry, here's your confirmation entry right here. This is more of a low risk entry because right here you're kind of risking, okay, I'm just going to kind of blindly long this as soon as you touch these lows, hoping this is going to work. This kind of tells you, okay, we have nice momentum candle here. There's going to be leftover contracts in here. I'm expecting some sort of reaction out of this fair value gap, and we should go higher. Versus right here, we already kind of rebalanced this, so you're kind of guessing, okay, if we rebalance lower, are we going to bounce or not? And the confluence with this is we do have the equal lows here, so this might be smart to buy because retail traders are, again, they're going to short this breakout, and this is also where their stops are going to be. Yes, during lunch, Roman. What should you expect during lunch? You should expect stop runs. Is this a stop run? Yes. You can play the stop runs during lunch. You just have to know what to expect. If it's not a stop run, then I likely wouldn't take it. There has to be a stop run during lunch because that's what ICT says. Don't trade lunch because a lot of people don't understand how to play stop runs. So if you do, I think it's fine to trade during lunch. Like if you guys know AM trades, I've asked him this question before. I asked him, do you trade during lunch? And he says, yeah, I think lunch is totally fine as long as you know what to expect. You just gotta deal with, okay, if you're in options, I don't think lunch is a good time for options at all. I've tried it a few times. It's not smart. Inverse fair value gap is basically when, see this bearish fair value gap here? See how we break above it with strong momentum right here? We close above it, okay? When we break over a bearish fair value gap and we have equal highs above, you want to see this act as an inverse. So obviously right here, you would not have shorted this because why? We hit these equal lows, so you would not have shorted this fair value gap. So you want to see us push back over it and use it as support to go back and hit the highs. So it's kind of like support turning into resistance, but just using fair value gaps. And I think I do have a video on my YouTube about that, which is Doddy's DDD, or Doddy's DD. Last week closed, new week open. Yeah, those are important. It's important to draw the new week opening. Okay, so like right now, okay, I'm a little late right now, obviously, but this is the opening of this week. If I'm bullish, I want to see us go below, and I want to see some sort of long setup accumulate before this week's open. Okay, if I'm bearish, I want to see us go above the open, which would be above here, and I'd want to see some sort of long set or short setup, and I'd want to see us. Wait a minute. So this is the wrong candle. I just realized. So here's this week's open right here. So if I'm bearish, I want to see us go above this week's open, and then I want to see some sort of short setup above the open. Just as if I'm bullish, I want to see us go below the open and then accumulate some sort of long setup. With Friday holiday, I just use the indicator, if I'm being honest. Let's see what it does. So if you use it, oops. Okay, this signs on a gap. I'm so confused. I guess it is. So it looks like this is what it looks like now. And right now I'm actually expecting a short setup somewhere in here. Yeah, so 15 minute. I'm expecting us to go down and hit this low right here. Somewhere in the 15 minute. We could totally go like this right now. Still. I'm just expecting us to hit this low and not go back above this 15 minute fair value gap. The new week opening gap, just use this indicator. If you really want to know how to draw it, all you have to do is go to the 5 minute chart. And in the 5 minute, you go to Friday's close, which is at 9:10. Okay, so here's the close. Here's the close, right? And you draw a box from the close to this week's open. Okay, and this week's open was right here, as you can see. Okay, and then you draw it over. And this has to be in the 5 minute. But again, the indicator does it for you anyways. Does anyone actually know, is the market fully open tomorrow? Because it's after, is there any stipulation on tomorrow's market? I'm not totally sure. I'm pretty sure that, aren't like the European or something markets closed still? Yeah, Easter bank holiday. So it's the banks, so if you're like in a cash account options, cash won't settle, right? That's how it works, right? And I'm pretty sure those are not good days to trade, but I'm going to still be live anyways because you guys paid for me, so I'm going to. Can you do a quick explanation of breaker blocks, adders, confluence, what we've already explained? Yeah, so breaker blocks, again, breaker blocks, I just look for an obvious sort of order block, okay? Like right here, these two green candles are to swing high, and some people would classify this an order block, okay? Obviously because we purged liquidity, okay? Am I really wanting to short these? Absolutely not, because we purged liquidity, we got nice momentum candles, so the draw should be to this high. But knowing that these technically would be order blocks if we didn't purge liquidity, the second we see a move above these at a swing high, so see how these are at a swing high as well. Okay, that's when you look for these to be combined with fair value gaps to the right. Okay, so you can see it's combined with this fair value gap right here. And the overlap is when you want to buy. So the second we get strong momentum over these order blocks at the swing high, okay, the second that happens, you want to see these hold the support, okay? And I know someone made a visual on like, oh, what if these don't hold, and what if you go back down to this fair value gap, right? If there truly is a breaker here, which there is, and the reason I'd argue there's a breaker here is because this red candle cuts off these green candles, so there's only 2 green candles now. We should ideally not retrace back to this fair value gap, okay? Okay, so my target just hit on the 5 minute, as you can see. Okay, so we rejected the 50-minute fair value gap, so my internal target just hit. Here's a low. That scalp to me, if that was market hours, I may have chased that, but right now, that would have been 2-point move. I don't really care about that. Okay, here's where I ultimately expect us to break through. Okay, it's 5-minute equal lows. We should break through it any second, or we could come back and then break through it again, but you can see they're now triple equal lows. We should break through them. Okay, because this looks like retail support, and we have an unbalanced fair value gap below, so most of the times these lows will be broken. Yeah, so this just hit a live breaker block, and this, I'm pretty sure this is a live breaker vacuum block. I think this is a vacuum block, a vacuum breaker block, which I don't think ICT's ever talked about. This is very rare. Wait, maybe no, I don't think it would be vacuum. I think the vacuum block would have to be formed right here before the gap. Let me fact check that real quick. I think there's a nice visual on Twitter that'll tell me. Does anyone know Lucius on Twitter? I think it's him. He is a PDF. Wait. Order blocks, Lucius. Oh, Autox. Press it to speak.
Yo, I just sent it to you.
Oh, you did?
Yeah, I have it
DMs?
saved because I've been like literally looking at this PDF nonstop. This is the one you're talking about.
Okay, let me check it. Yeah, this is it. This is it. Let me check. Okay, so there's, see how these equal
Vacuums are
lows
all
are
at the
ran?
bottom.
Okay, so these equal lows were just ran, which is my ultimate target. So again, even though my bias is bearish right now, if we get a long setup out of here, I would not mind taking it. Because it's HSS and because I'm going to bet in 2 hours, am I really going to take it? No, but if this was formed during market hours, it's just one of those things where, okay, I could see a long setup forming from here. Would I mind taking it? No, I would not. So let me go to this. Okay, so the vacuum block has to be before the gap, actually. Yeah, so it's not a vacuum breaker block, but that would be interesting if it was. If this is a vacuum breaker block, it would have to be before the gap. So this was actually today's open, so this should just be a normal breaker. So see how this is a swing low. Okay, this is a swing low right here. And we get a red candle before an up move. We close below that red candle. Now we want to see this use as resistance to bring us down to these equal lows. And what's combined with it? A fair value gap. So makes it even more high probability.
And this down move we're on now would be considered the propulsion block, I think.
What would? The
This
down
one
move
wrong.
right now?
Yeah.
The down move right now would not.
No, I mean like these two 5-minute candles, if we started to return back up, we wouldn't want to see it pass above the 50%.
Oh, yeah, I get what you're saying. Yeah, propulsion blocks, I don't really use propulsion blocks. I just know they're like, propulsion blocks are just the second balance off another order block. So if we get an order block off from an order block, that's usually a propulsion block.
Yeah.
So yeah. So does anyone have any other questions? Did you see kind of your bias kind of played out, Otto? The thing that I was looking at too.
Yeah, I did. I haven't really been. I don't really look at the charts on a Sunday night, but when you messaged me, I reopened it.
Yeah. Juice took the trade. Yeah. So you can actually see. Do you see the SMT we got off with NQ and ES?
Yeah.
Yeah, so see how we made a higher high in NQ and a lower low on ES, so that was the SMT. So that's why, obviously, I don't want to see a long setup here, okay? If I was holding runners here, I'd try to hold on to here and see what had happened, just because I know
Oh yeah, we made another SMT.
Yes, we did make another SMT as well.
No, I mean the one you're pointing out now. Like I had one
Oh,
marked before
yes,
this high on
yes.
NQ.
Yes.
I had the high right, like
Yeah.
the high inside the one you marked, like just below those two highs.
Yep. And NQ, I
If
think
that
could
makes
definitely
sense.
go for this. Same thing applies right here. Even though I think NQ is going to go for this sell side, look, it's still a very good idea to draw the CE of it, because if I'm wrong, we should bounce here. So that's another thing. And I really do think we could get a long setup from here, and I won't care. Like Matt said, why are you generally bearish? I was really bearish more off open. Now I'm kind of neutral. I want to see what happens here. Okay, my prediction was I think I want to go to this low, but if we get a long setup right here, which I could see, then I would definitely change my bias. Is Elias in here? Elias asked me how I identify MMXM models. Right here, you can see this could be the start of an MMXM or market maker sell model down to this low. But I don't know that for sure, so it's still a good idea to take profits here just in case you're wrong. But having this CE of this rejection block is smart. And so Matt, hopefully you get kind of why my bias was bearish off open, but now it's kind of I just want to see what happens in this. This is kind of a 50-50 where if I'm not already in entry, I just want to do anything. If this was market open, I would have already been in here and I would have taken a partial here, and then I would just be holding the rest. If it was a funded account, now I'd be all out here, definitely. Yeah, I can link the PDF. Or Otto, can you link it in live trading chat?
Yeah.
What PDF are you referencing? Yeah, just link it.
How do I open the live trading chat? There it is.
Alright.
That's all your ICT block types. It's like amazing.
Yeah.
Like I've honestly been nonstop studying it, and I still struggle with like some of them. But they're super powerful.
Yeah. Erica said, "Would you enter? Do you go for specific targets, number of ticks?" No. If it's a choppy day, I only go for 5 handles. If it's just a normal day, never go for a certain amount of ticks. If you just say, "Oh, I feel like going for 3.5 ticks right now," you should really base your target based off the chart. So I'm not going to randomly, like if I'm shorting this, I'm not just going to randomly sell in the middle of the trend. I'm going to wait for a low to be hit to sell. Okay, it's, again, big money has to enter these highs and lows, so the chances we hit a higher low when after getting in position it's going to be a good chance. So, again, if it's like a choppy day and this fair value gap to maybe right here is 5 handles, take the 5 handles, but ideally targeting the lows or highs on a chart is much better because it's gonna make your plan better. And when I used to trade options, I used to sell 20% or 10%. Okay, and that was a bad idea. I think it's better to target highs and lows on a chart. On options, sometimes like if it's a choppy day and you see chopness and you get in and you see giant pumpy candle, right? I think it's good to get out maybe in the delta pump as soon as you see the pumping candle. But if it's like a normal day, wait till higher lows hit, okay? And let's say you do options and it just takes a while for this low to hit, right? Just put your stop to break even. The rejection block is this this wick on NQ right here. Okay, it's gigantic. So rejection block, I generally draw the fib from the start of the wick to the low of the wick, and I look at the 50% retracement, which is 13,139 in this scenario, and I see if we hold or not. If we cut through it, we should go hit this low. I'm kind of watching this for a bag up right here to see if we get a potential short, and obviously this one right here.
If you guys do want to look at the projection blocks, those are also in the.
Yep. If we broke back above this momentum, that's when I'd be like, okay, my bias is probably wrong. We're probably going to go quite a bit higher. So ideally, this to me is the protected swing high right now. But again, if we got like a long setup here, I would not mind taking it. The XY is actually bouncing more than I thought. Last week, my bias was actually bullish on DXY to here. And then I saw this giant red candle. I'm like, we might be heading for down here, and I wasn't sure. So I kind of changed it. And I don't base my plays off DXY. I don't watch DXY. I've been wrong about DXY, but still bank on ES. And as long as you're banking on ES, I don't think you need DXY. But it's just like another tool you can use to predict if you want. All right. Okay, I think we've hit the hour mark. So that was the hour mark. So that's all I got for today. See a lot of new faces in here, so hopefully this helps some of you guys. I probably will be going live for free maybe once this week. I'm not 50% chance I go live once this week. I'll definitely go live again for free next week, but for premium numbers, I'll obviously be live. And I'm going to try to record a session, me going live and post it to YouTube this week, so hopefully that comes out nicely. Then you can just kind of watch that and see my live thoughts on hindsight. So yeah, that's all I got for now. Hope you guys have had a good Easter. Not have, because it's almost basically over, but alright, I will see you guys later. Just let me know if you have any questions in trading chat. So yeah, peace.